tax that was authentic, and it got flagged, and they said it was unauthentic. And even though I sent them proof of it being authentic, they still said I couldn't sell it. So that kind of worries
Oh
me.
well, yeah. Those designer things are like always. People are always
Yeah,
making fake shit.
yeah, exactly. Which is bullshit, because it was a smartwatch. You can't
Yeah,
fucking fake a smartwatch, you know?
yeah. Well, you kind of could.
Yeah,
All the
I
Apple
guess you
ones and
kind of could,
Androids.
but yeah, I've never seen a fake Apple Watch.
Alright, guys, so today's video I'm going to be talking about taxes. The number one thing we try to avoid and try not to pay, and they're just like, oh, I'll just do it later. I won't, worry about it right now. Or what if I just don't pay it? That's what I'm going to be talking about today. So, as a disclaimer, I am not a licensed CPA. Now, don't take, my advice, could be good just to kind of get an idea or just to get you in to go talk to a CPA. And remember, I live in California, you might live in a different state or whatever. Um, so, your taxes may vary on what you have to do. But I talked to a CPA yesterday, and I'm gonna kind of just give you guys a rundown of what she told me, so you guys can maybe get an idea, or just to maybe motivate you to get in to talk to a CPA. Now, taxes can be scary. They could be frustrating, and as a new seller, you can forget to write down your gas mileage, keeping all your receipts, and putting it into an Excel sheet or writing it down, and keeping track of stuff. Your inventory, all that good stuff. So I'm gonna kind of give you guys a rundown of what she told me, and then hopefully you guys, go talk to a CPA, because I believe the deadline's April 15th to get your taxes done, and I know a lot of people try to avoid doing their taxes. So, I really highly recommend you guys to go and talk to a CPA and get this stuff over with. Because guys, you gotta remember, if you don't do your taxes, this could be really vital for your business. IRS can actually, shut down your business for the most part if they really wanted to. If you like, there's a thing called tax evasion, which is basically like if you, avoid doing taxes, you can actually go to jail. So it's actually very serious. I know it's a subject a lot of people don't like to talk about, but it's definitely one that needs to be talked about, especially if you plan on taking this serious and you eventually want to go full time, or even if you're part time, like you still have to do taxes. And I was one of those people that didn't like watching videos like this from, for example, from Rockstar Flipper, just because I just hated to hear the word taxes. I was like, not even wanting to watch videos like that. But now that I'm starting to get more serious into it, it's something that it's very vital to your business, making sure you're keeping track of your numbers. And on top of that, it's always good to know your numbers. Like, you have to know your numbers, you have to know how much you're making, how much you're losing, and stuff like that. So I'm going to kind of give you guys a rundown of what the CPA told me. Remember guys, I'm not a licensed CPA, so don't take this as tax advice, but I'm gonna just give you guys some insight on what she told me. So she gave me this paper for Schedule C, which most of us will file as, because we're not a corporation or a LLC or whatever. Maybe you are. So this is just a profit or loss from business. From my understanding, they tax you off your profit, so you pretty much have to like write down your income and your expenses. It's kind of hard to see. You got to write down your income. I'm kind of just gonna read it. So she said she was self-employed as well, so it kind of helped out. But she said to document how much you made, your gross income. So say if you made $50,000, $40,000, you write that number down. And they basically want, my questions to her were, what do I need to bring you? They don't want a pile of receipts. Those receipts are pretty much just so you could write down your numbers and how much you spent in inventory or how much you spent in gas. They want that all into like a spreadsheet or just written down or something like that. And you're just basically trying to get a percentage of that number. So say if you spent, a total of 3,000, so you spent about, say 7% in gas and maintenance and stuff like that, you would take that percentage off your profit, from what I believe. From what I understood, that's how it works. Um, so she talked about income, so my gross, how much I made, if I got any returns, how much I paid in returns, if I paid, so returns, and then if I paid shipping, back, which I do, so that's all expenses, that's all a loss. So write all that stuff down. If I did any advertising, like I was touching on car and maintenance, office expenses, so if you have, an office in your room, or you could write down like a certain amount of square footage. Remember, talk to a CPA about most of this stuff. Any repairs or maintenance on your car, you could write all that off. Your phone bill, you could write a little bit off. Now that's a little of a tougher subject, because what I heard is you do 50% of like your electric bill, 50% of your phone bill. That's what I heard, just because our business is basically ran on internet and phone, so you could write some of that off for sure, because we use it for our business. If you have any light kits, any thermal printers, any office supplies from pens, office paper, ink, anything that you use business related, from my understanding, you could write off. So she also talked about any expenses from business use of home, so like my electricity, internet, phone bill, pretty much that's it. And then you have to know your cost of goods sold. I still kind of don't understand this part, but I still got to kind of figure that out. I'm going to probably send out a couple messages to some people I talk to, some influencers on YouTube and Instagram, kind of get a gif of that. So if you guys need help with that, I'll try and help you with that if I, can explain it better. And then purchases, materials, and supplies, and then you got to add up your inventory at the end of the year. So yeah, that's pretty much it, guys, from what she told me. She was just telling me a lot. This is how the mileage, you would do your mileage. And then it says, your starting mileage. So say you have 20,000 miles, then your ending mileage, so 20,030. And then the date, and then the reason of where you went. So say if you went to Goodwill, you write that down why you went, and that's pretty much it. So anything business related has to be business related. So if you put gas for business purposes, you would take that and deduct it. But if you're going to Disneyland or something, that's not really a business trip, so you can't really deduct that. But say if you're going to Goodwills, or you're thrifting, sourcing, then you can deduct that from your on your taxes. Another thing, if you have business meals, this one's kind of a touchy subject. I think you could only take 50%. You could tax 50% off the meal. If it's business related, so if you met up with another reseller and you guys are talking about business, it's kind of a touchy thing. But make sure you guys go talk to a CPA, guys. I can't stress it enough. I know it's annoying and stressful, but she told me it's not as bad as people think. You just got to go in there and talk to them. I've talked to 3 CPAs so far this year, maybe 4, and it usually goes pretty good. They'll help you out. And people are scared, because they don't know if they're going to have to pay taxes. Well, now that if you got this year over with and you've been selling for over a year, now you need to know, you need to put money back, at least 20% of your income a month, what she recommended, so you have money if you had to pay taxes, so you're prepared. And I know it's hard. A lot of us, live on this stuff. I'm one of them. And it's hard sometimes to put back 20%, and then you have to invest in inventory, then you need to have some bills to pay. So, that's the process, man. That's what I love about it. I don't like it easy. I like it hard. I like it challenging. That's why I went into business for myself, because I don't mind, the bumps and grind. So, it's for me. I love it. Some people just need a little advice and a little push. So that's why I made this video. So go talk to a CPA, guys. and get this stuff situated. It's almost the end of January, heading into February, so we got February, March, April. I'm gonna try and do my taxes probably next week, the next 2 weeks, just to get them over with, and I can give you guys an update or something if you want. So thank you guys so much for watching. Hope this video at least helped you out a little bit or motivated you to get into talking to a CPA. You can always call them and ask them to set up an appointment. What I do when I go inside there, I went in there like 2 or 3 times this year, or last year, once this year, and I just because they do charge, you know what I mean. So make sure when you go in there, you tell them like, hey, I'm self-employed. It's my first year. I'm new. Is there anybody I could just talk to? I just want to know like who I could run my numbers by. Like, what do I need, to bring in so I could do my taxes? I just have a few questions, and they'll be happy to help you out. You won't get charged anything like that. You shouldn't. So hopefully you guys enjoyed the video. If you guys are new, please subscribe. We're almost at 300 subs, so it'll really help me out. And thank you guys for all my supporters out there, and I'll see you guys tomorrow in the next video. Peace.